Hello everyone, welcome back to our channel. Today, we are diving into an important topic for many NRIs and returning Indians, the RNOR status in Indian taxes. We will explain what RNOR means, why it exists, who qualifies, and the advantages it offers. Please stay tuned till the end of the video as I will be talking about a couple of tax planning strategies that you can do while in RNOR status. So let's get started. In Indian taxation, individuals are classified either into a resident or a non-resident category for tax purpose. But did you know that there is a special subcategory under resident status called RNOR, resident but not ordinary resident? RNOR status is a unique class under the Indian Income Tax Act, and it serves as a transient status between NRI, which is a non-resident Indian, and being a full-fledged resident. This status is particularly beneficial for NRIs who are transitioning back to India. It is important to note that this categorization is only under Income Tax Act. It does not affect your residential status under other laws. So keep that in mind. So why does RNOR exist? Well, RNOR status has been in place since 1961 under Income Tax Act to help NRIs who are moving back to India permanently. It provides a smooth financial transition in the initial years of return. Imagine you lived in abroad for many years and accumulated assets. Liquidating them and transferring them back to India takes some time, and RNOR status gives you some grace period to manage this transition smoothly. Now, let's talk about who qualifies for RNOR status. As we discussed, there are two main categories, which is a resident and non-resident. So anyone who lived in India for more than 182 days, they would automatically become a resident in that particular fiscal year or in which the tax returns are being filed. However, if somebody stayed for less than 182 days, but stayed for more than 60 days and 365 days in the last 4 prior years, they would still be considered as a resident. If they don't qualify for this, they will be a non-resident. So based on that, under the resident, once somebody is under a resident, and if they have been a resident in the last 2 years of the 10 years, and they stayed for more than 729 days in the prior 7 years, they would become a resident, ordinary resident. However, if they have been a non-resident for 9 years out of the last 10 years, they would be qualified under the RNOR. If they don't meet this criteria, however, they stayed less than 729 days in the last 7 years, they can still qualify for RNOR. And in Indian tax system, the time period is from April till March of next year. So that is the time period in which the the duration for how long you stayed in India is calculated. And please note, this is calculated based on the prior years, and this is calculated in the current fiscal year when you are submitting your tax returns. So there is a potential to have a maximum up to 3 years to be under RNOR status based on how you plan your move to India. So how long can you maintain an RNOR status? So you can be classified as an RNOR status up to a maximum of 3 years. After this period, you will be considered an ordinary resident for tax purpose. So what are the advantages of RNOR status? So when we look at the advantages of being RNOR, one of the biggest advantage is exemption of income tax on the foreign income unless it's derived from a business or a profession that's controlled from India. This means that while you are in the process of transitioning back to India, your foreign income remains largely non-taxable, giving you a significant financial relief. For example, the savings interest, FD, the dividends, the capital gains, any of these passive investments that you have abroad, and the income generated from these vehicles are exempt from Indian income tax while in the RNOR status. So in the RNOR, it allows you to enjoy some of the benefits of being a resident without any immediate tax implications on your foreign income. It's like having the best of both worlds during this transition period. Also, keep a note, you don't need to apply for RNOR status. It's automatically determined based on your stay and residency history. This makes the process straightforward and hassle-free. Now, let's talk about a couple of strategies that you can do from a tax planning to maximize the benefit while in RNOR. The first one is while returning back to India, and if we have the flexibility to move back to India, you can plan your timing so that you can maximize the RNOR status for up to 3 years. Remember, there are two key criteria to qualify for RNOR: for how long you have been a resident of India in the last 10 years, and in the last 7 years, how many days have you been living in India. So based on that, you can time your move back to India so that you can maximize the RNOR status for up to 3 tax years in Indian tax system. And keep in mind, Indian tax system starts from April to March of the following year. And definitely there could be some planning that can be done there. The second one is, as we already talked about, there is no income tax on the foreign income that's not controlled from India, like any business or a profession. So, for example, the dividends or capital gains from some of the stocks, which is not taxed in India while being in RNOR. So, in US, for example, if you are a citizen of India and if you are a non-resident, US does not charge like or do any income tax on the capital gains on the stocks while you are being a non-resident. So this provides an opportunity for someone to readjust their cost basis, which reduces the overall capital gains when you sell it later, or you can sell it and take advantage during this transition so that you can maximize the returns that you can get after the taxes. So to summarize, RNOR status is a special classification that provides tax benefits for NRIs returning to India. It allows for smooth financial transition by exempting foreign income from Indian taxes for a limited period of time. If you're planning to move back to India, understanding the RNOR status can be a crucial part of your tax planning strategy. Once again, thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more informative content. Don't forget to hit the notification bell so you will never miss an update. If you have any questions or topics you would like us to cover, leave a comment below. See you next time.